related to mortgages or financial companies.
One more massive short, Michael Burry's latest gamble might not be too concerning. The famous The Big Short trader Michael Burry, who won millions of dollars betting against the US housing market in the 2008 Great Financial Crisis, has now taken significant negative positions against the S&P 500 and the NASDAQ 100, two important US indices. Burry's Scion Asset Management said last week in a regulatory filing that it purchased put options for the SPDR S&P 500 ETF Trust and the Invesco QQQ Trust Series 1 ETF, which track the NASDAQ 100 and S&P 500 indices, respectively. The entire value of Scion's wager is $1.6 billion, despite the fact that this is not a naked short sale and that his potential loss is only as great as the amount he paid for the puts. Burry's track record and position size indicate his conviction. This disclosure has not caused any change in the US market. Over the previous 5 years, the S&P 500 and NASDAQ 100 had positive gains. On August 23rd, there was a significant purchasing fueled by Nvidia's outstanding earnings. But worries about interest rates and inflation haven't gone away yet. After predicting the 2008 housing market collapse, investor Michael Burry gained notoriety. In 2015, actor Christian Bale played Burry in the film The Big Short. The program emphasized Burry's advice to short the US housing market by purchasing collateralized debt obligations, a type of insurance that would pay out large if specific mortgage bundles collapsed. It was hailed as one of the best Wall Street documentaries. In 2024, where is Michael Burry? Understandably, Michael Burry will be silent in 2024. All of the Big Short investors' dire forecasts and cautions regarding the stock market have come to pass. Burry has predicted the arrival of the mother of all crashes in September 2022. Burry, who gained notoriety for correctly predicting the 2008 subprime mortgage crisis, tweeted the menacing word "sell" in January 2023, frightening a lot of people. Burry's short bets were, however, completely offset by the stock market's AI-fueled rise, which continued to push stocks higher in 2023. Michael Burry purchased $887 million in put options on the SPDR S&P 500 ETF Trust, which tracks the S&P 500, and $738 million in put options against the Invesco QQQ ETF, which measures the NASDAQ 100 in the second quarter of 2023. He ended these wagers in the third quarter. Michael Burry's fourth quarter portfolio details are available, and they reveal that the investor was a big shorter turned into a big buyer at the end of 2023 by acquiring many new interests in different firms. Scion Asset Management, Burry's fund, had a nearly twofold increase in its overall portfolio value to $94 million from $44 million, excluding options in the preceding quarter. Is Michael Burry a Chinese investor? Despite the continuous decline in Chinese stocks, hedge fund manager Michael Burry, who gained notoriety from The Big Short, has boosted his holdings in Chinese IT giants Alibaba and JD.com. Michael Burry further raised his fourth quarter stakes in JD.com and Alibaba.com. Alibaba's stock is still cheap when compared to Amazon, which is a big deal for investors, even with its favorable metrics. While following big investors like Burry can offer insights, investors thinking about Alibaba and Amazon should evaluate the risks and goals on their own. Burry's persistent interest in Chinese stocks is noteworthy, given his reputation for holding contentious and unconventional opinions. Examples of these include his short bets during the 2008 market meltdown, and more recently, his short positions on the semiconductor market. In Q4, Alibaba accounted for 6% of his portfolio. It can be dangerous to base investing decisions only on the activities of a large investor, because their goals and schedules might not align. But it's worthwhile to investigate the reasoning behind these choices. Comparing Alibaba's markdown to Amazon's, it appears unduly inflated. Alibaba's stock has underperformed even though its cash flow metrics have remained strong. Indicators like the company's enterprise value to profits before interest taxes, depreciation, and amortization have significantly decreased as a result. Do you think this Burry bet is worth it? Buying an asset exclusively on the advice of another investor may not work out as well. However, there is no harm in keeping track of and learning from the actions of other investors, then forming your own opinion depending on your goals and risk tolerance. The aforementioned data indicates that Alibaba's stock is significantly discounted. The company is trading at about 5 times its estimated EBITDA for the next 12 months due to the market's caution regarding macroeconomic variables, competition, and other concerns. However, while being more expensive than Alibaba, Amazon doesn't appear to be overpriced. This is particularly true in light of the company's substantial developmental prospects, which include maximizing cash flow in relation to capital expenditures and other efficiency gains in artificial intelligence, cloud computing, and related fields. As a result, both businesses appear to be excellent investments, although Alibaba appears to be more asymmetrical and riskier. Does Michael Burry own a stake in Nvidia? It was disclosed in November 2023 that Michael Burry's scion had a brief stake in the semiconductor industry, which is home to firms like Nvidia. In the second quarter, Burry's scion Asset Management bought bearish put options on the Invesco QQQ and SPDR S&P 500, but those positions have since been sold off in his most recent Securities and Exchange Commission report. Still, Scion did purchase 100,000 shares of the nominally valued $47 million iShares semiconductor ETF offered by BlackRock. Nvidia, a graphics chip expert whose stock price has nearly tripled this year due to optimism about AI, is the third biggest investment in the exchange-traded fund. The Scion CEO usually restructures most of his holdings every 3 months, so it was odd that he increased his positions in Nexstar Media, Safe Bulkers, Star Bulk Carriers, Euronav, Hudson Pacific Properties, and Stellantis during the most recent quarter. He reduced his stakes in the Real and Crescent Energy and offloaded his other investments. Notably, he purchased shares of Booking.com and Alibaba. Burry gained fame after the book and film The Big Short documented his massive gamble against the housing boom in the mid-2000s. In addition, he has a reputation for having gambled against Elon Musk's Tesla and Cathie Wood's ARK Innovation Fund in the past, and for having invested in GameStop well before the video game store turned into a meme stock. Scion's Q4 2023 13F, which was filed with the Securities and Exchange Commission, states that Burry ended his year by closing off one of his most prominent jobs, a significant wager against the semiconductor industry. Burry specifically reduced his losses on a put position in the iShares Semiconductor ETF, BlackRock's benchmark semiconductor fund, which had previously made up close to 48% of the portfolio. Scion had acquired put options with a notional value, the entire potential value of a financial security of $47.4 million. Scion has closed out such possibilities according to QF13F. Does an average investor follow Burry's lead? Burry's advice should not be followed by the average investor. Most investors have amassed a stock portfolio in order to assist with retirement funding. In contrast, Burry already has great prosperity, and investment is not just his career but also his passion. He has enough experience to make rational, short-term wagers in the direction of the market and to switch between different securities every few months. The leader of Scion is renowned for his gloomy forecasts and warnings. As an illustration, in the summer of 2021, he issued a warning about the greatest speculative bubble of all time in all things, and cautioned investors in meme stocks and cryptocurrencies that they were getting themselves into the mother of all crashes. Scion invested 20,000 shares or 5.7% of the portfolio in this healthcare company, HCA, a well-known hospital and medical center provider with strong ties to the state and federal healthcare organizations that authorize new medical buildings and regulate existing ones, closed at $330.48 per share on March 19th and is up 22.3% so far this year. This gives HCA a significant competitive advantage over recently established rivals who have to raise the money and get past legal and regulatory obstacles to open new medical facilities. Additionally, Burry purchased 50,000 shares of the $354 billion information technology company Oracle, which closed on March 19th at $129.19 per share. After being acquired in Q4 at a price of roughly $110, Scion saw a good price increase right after. Oracle's weighting in the portfolio is 5.6%. Oracle is quickly making its way into the cloud computing and AI spheres. However, it is sometimes forgotten while giants of the computer industry like Microsoft and Nvidia make headlines. Oracle's primary focus remains on corporate and database software, but its recent move into the cloud is beginning to show positive results. In the most recent quarter, the company's cloud revenues increased by 52%, and Oracle signed 14 new cloud software development contracts worth more than $1 billion apiece. With the purchase of 100,000 Citigroup shares at a total market value of $5.1 million, Scion increased the size of its holdings to 5.4% of the portfolio. It appears that Burry is another winner with Citigroup right away. As of March 19th, the stock had increased 15.5% in 2024, with C's forward dividend yield of 3.6%. It presents investors with a strong income story as well. And that's all for today. If you like this video, give it a thumbs up. Make sure to subscribe to our channel and hit the bell icon to receive notifications. Express your valuable thoughts in the comments section below. Until next time.